Well, good morning. I'm delighted to be joined today by Claudio. Claudio is an independent precious metals advisor and a commentator and writer on matters economic and banking and monetary and all related issues. Claudio, thank you very much for joining us.
David, thank you very much for having me.
When we set up this interview, we did a lot of ground to cover, but events have overtaken us a little. So let's start with the recent events. Over the last 4 days, we've had, at the last count, 2 American banking collapses. We've had essentially an unlimited quantitative easing type bailout from the Fed to underwrite all of the degraded assets of the United States banking system and lend new money on them at par to bail out the banks and prevent a complete catastrophic loss of confidence in the banking system. Time will tell as to whether this is successful or not. This won't have been a surprise to you, I'm sure, but how do you see the current situation in terms of banking stability and where things are likely to go next?
I think, the boom-bust cycles basically are driven by central banks. We have a boom when central banks are reducing interest rates, inject new credit into the system. Then when you have, everything is going up basically, and what we are now witnessing is basically that, we are seeing interest rates rising fastly. And at the same time, when we look at M1 or M2, also there the credit is basically reduced within the system. So the outcome, of course, the logical quintessence is always when you rise interest rates and you have less new credit injected into the system, this is going to lead to a bust. And I think now with the Silicon Valley Muppet Show Bank, which basically was mainly, it's kind of LGBT and the green bubble. That's, the customer they had in the background, which is all related to central planning of Marxism. I think that stuff has collapsed. And now, I think the trend is clear. The banks are having huge problems. We can see that, not only in the States, but also in Europe. And even if we look at the new theories which are pushed on us, like modern monetary theory and universal basic income, this is all, neo-Marxism. It's not going to work. It's never the quantity of money, or it's never a problem when it comes to the scarcity of money. It's always the scarcity of goods and services, because money is just a means to an end. We need money to buy goods and services. So if we have less goods and services, then basically prices are rising or falling depending on how much credit is injected into the system. And that has an impact.
Of the aspects we've not had a chance really to examine in the failure of Silicon Valley Bank, but they seem to have gone very much for a hiring policy in accordance with a woke political agenda, not in accordance with competency. And things like risk control, risk management, as a result, doesn't appear to have been well handled. This was also the case with the recent collapse of the FTX exchange and Bankman-Fried, who assembled a group of 20-something hipsters to run an enormous financial organization, and they lacked the experience, they lacked the hard-won experience of managing massive financial risk, and as a result, the management systems appear to have been grossly inadequate, and collapse is the result. It has been suggested that the rail catastrophes in America recently are also related to this loss of competence from society that comes from the neo-Marxist woke agenda. So just before we go on to more monetary matters, from what you see of the banking industry, is that type of problem
becoming a contagion? Is that widespread?
I mean, I think the banks are really the canary in the gold mine. I mean, that's even if we believe this woke and we believe monetary theory and universal basic income, it means that will be the end of the traditional banking system, because everyone will receive his account directly at the central bank, and so I mean the business model for the banks, I think, is heavily damaged. And so I mean because as I said before, it's never the scarcity of money, it's always the scarcity of goods and services. So just injecting money, if it would be possible to print wealth, I mean, that would be fantastic, of course. But at the end of the day, we always have to save, produce, put money on the side to invest, and then produce goods and services. And when we look at the whole, especially the last 3 years, with Corona and the lockdowns, we haven't been that productive. We basically disrupted the global supply chains. We destroyed the international division of labor. So it all has an outcome. There is always cause and effect. And I think now we can see the results. So, by, if you think about monopoly, if you play monopoly and I'm playing the bank, and I just, instead of giving every player 100,000 credit, I give them everyone 300,000. I mean, we haven't created more wealth. The outcome is that just, the same hotels and restaurants or whatever you can buy, it's still the same quantity. So prices are just rising because there are more credit chasing goods and services. Therefore, the prices are rising. And I think this is now coming to an end. And at the same time, of course, there is always inflation, and what we have seen over the last, 3 years. I mean, whatever our governments are deciding, the politicians, it's completely against the people in the Western world. Now they destroyed, with the lockdowns, the small and mid-sized companies, and the consequence is that it's a centralization within the system, and this is also what I expect in the future. It's possible that we're going to see more bailouts, and but they're going to bail out, the too big to fails, and so the small and mid-sized banks most likely will be the ones who have to go first. So it's a centralization within the system, centralizing even further until it's going bust. And how, of course, when it will happen exactly, we don't know yet. But I think the trend is clear. The world is becoming much more unstable, and volatility is back, and and also inflation is you can talk it down for a short period of time. That's what we have seen over the last few months. Basically, the results from the United States were better than expected. Europe had a very weak winter, so gas prices collapsed, energy prices came down. Then the official narrative has been that China is not going to open up, and now they did. And this was basically good enough, for the mass financial markets to believe that there might be a recovery. And I think, just this SBV or the Silicon Valley Bank, it just showed, there's so much risk in the system, and even central banks cannot control it. And when they reduce injecting liquidity into the system, I mean, it's coming, then the bust will occur. And once this is going to happen, then they will have to restart the printing press, trying to bail out, the too big to fails. And the outcome there is, of course, sooner or later, hyperinflation.
Yes, this is the way that the risk that we see as well. That eventually, the central banks ultimately have one tool. They have one trick to play, which is to print more money, and they keep going to this. And eventually, the only way that ends is to destroy the currency. The currency itself becomes worthless, and you have a hyperinflationary collapse. Now, obviously, this has been a concern right back since 2007-8, when there was a large injection of credit into the system at that point to bail out the banks. But of course, the actual money supply didn't go up very much, and a lot of people were looking for runaway inflation. Of course, it didn't happen. But after the vast creation of currency, of credit in 2020, it's certainly happening now. So your particular area of expertise
is precious metals. So perhaps we could start with you outlining how you see the role of precious metals in the monetary system now, and in the monetary system post a collapse, post an inflationary or a hyperinflationary collapse of the existing banking system.
Gold is money, everything else is credit. That's what JP Morgan already said back then, and this is still true. Just because, 1 or 2 generations have forgotten gold, it doesn't mean that gold doesn't play a role in the future. On the other side, of course, what we are witnessing for a very long period of time is already that, central banks are buying a tremendous amount of gold, especially the non-Western world. China accumulated a huge amount of gold. We don't have the clear figures because it's all going through the Shanghai Gold Exchange. We can see, countries with weak currencies and which are now more in alliance with the East. They are buying gold. And I think, there's an old saying that, the one who owns gold is going to make the rules. So I think gold will definitely be part of the future system. And what you mentioned before, destroying the monetary system. This is something that Lenin said. Lenin always said to destroy the bourgeoisie the bourgeoisie system, you basically have to destroy, their monetary system. That's exactly what is happening. It already happened in the past, 100 years ago. With a big reset we had 100 years ago. And I think history does not repeat, but it rhymes. So we can see exactly the same patterns. And just to give you, I always tell because all figures we know are so inflationary. We are talking about trillions of new credit injected into the system. I think since 2019, we injected roughly 80 trillion, something like that in total credit. And I always say 1 trillion seconds represents 31,709 years. So it's a huge figure, but we cannot grasp it any longer because we lost somehow the measure. But it just shows, they are bombing us back to the Stone Ages when we look at how much credit has been injected into the system. And of course, in the past we had this Bitcoin, the crypto movement, which was a new market to play with. The tech, of course, the tech cycle. And I think, what they tried for a very long period is also to push, the green bubble, which is at the end of the day, nothing else than central planning. Those concepts, they don't make sense. So it's, what the money which has been politically allocated into this sector, it's basically that capital. And that's also why we have seen this Silicon Valley Bank collapsing. So it's, we can always try to ignore reality, but one day, reality is not going to ignore us. And therefore, I think, people have to prepare, and maybe another, because everything is operating in cycles. And I just did an interview a few weeks ago with a friend of mine. And so, we had a tech bubble from 89 to 2000, 11 years. It didn't make sense, to be in the gold market, in the commodity markets, for example. It was really, money went into this tech bubble, the new economy. And then in 2000 to 2011, everything changed. And then we basically had a commodity cycle. That also was the time when gold went from $180 to $1,900. And now in 2011, basically, it switched again. From 2011 for another 11 years, we had the tech cycle, new credit, tremendous amount of liquidity injected into a new sector. And this has changed now. So since end of last year, beginning of this year, we have seen the same signals that we have seen the last time in the year 2000. Because basically gold, silver, it broke up against all currencies, against the S&P 500, against, government bonds. And the last time we had that kind of constellation or those kind of signals, that was really in 2000. So my understanding is that we are now back in a commodity cycle, and therefore also in a gold and silver cycle. Because even when you look at the total financial universe, 100% of everything which is worth something, I think it's 2.8% which is in commodities. and the rest is equities and bonds. So the big bubble is in equity and bonds, and something which is really dirty cheap, that's basically commodities and gold and silver, stuff that you can touch, stuff which has no counterparty risk, stuff which has it's not a promise to pay. So I think, we can become our own central bank by leaving this fraudulent fractional reserve credit Muppet Show system and basically exchange, the fiat money we have into something tangible and which cannot be inflated or deflated away. And then we have our own stock, our own central bank, which consists of physical gold and silver.
I remember in what is known in Britain as old money. I'm just about old enough. We changed our coinage system in 72, something like that, into a decimal system. And before that, it was pounds, shillings, and pence. And I remember my father, who was not daft, he would always check his change, his silver change, and anything that was 1947 and earlier went in a tin, because that was a silver coin. And the value of that went up many fold over face value. And back in the day, that was what the coinage was in the United Kingdom, and it was beautifully simple because it was pro rata on weight. So you had a tiny little coin called a silver threepenny bit, which was about this diameter, and twice the weight of that, you had a sixpence. Right, there was 12 pence in a shilling, so twice the weight of a sixpence, you had a silver shilling. 2 shillings made a coin called a florin, which was exactly twice the weight of the shilling. And you then had a half crown, which is 2.5 shillings, and 5 shillings was a crown, a quarter of a pound. So you could take all of your silver money and put it in a bag and weigh it, and you would get a precise quantity of how much money you actually had. You didn't need to count the coins, you simply weighed the coins. So that was the UK system at one point. So you had a silver being used in circulation. And of course, up until the First World War, we also had a system where it was gold backed, or it was gold backed on a fractional reserve system. More on that problem in a moment. So we had 25% gold backing to the pound, and £1 was a sovereign coin. Now, if you to go today and buy a sovereign coin with sterling, it's about £400. So it's lost, the pound note against gold since 1914 has lost 399/400ths of its value. So it's almost been completely wiped out against a stable currency, i.e. gold. So we had this situation where we had silver coinage for day-to-day purchases, and we had a gold-backed pound for larger purchases, albeit the gold was fractional reserve, not 100% reserve. We can see central banks buying gold, as you say, Eastern central banks, not the Bank of England, but many central banks across the world are buying gold, to a point that I understand is the highest ever since the Second World War, the highest levels of gold purchases. So they are obviously seeing the gold becoming more important, gold becoming remonetized. The position of silver is much more difficult to understand because it's an industrial metal. It's been a monetary metal. It's produced into coins. There are a small group of people worldwide who are busily stacking silver coins, and it certainly maintains a degree of value higher than paper currency, but it's by no means equivalent to gold and how it's behaving. What do you see the role of silver is now and in the future?
Gold is the money of the kings. Silver is the money for the bourgeoisie. Barter is the money of the farmers, and debt or paper is the money of the slaves. So at the end of the day, I see, of course, silver. I always tell my customers, gold, for example, during the Weimar Republic, an ounce of gold, 2 ounces of gold purchased a villa in Berlin. So, the purchasing power in the transition period when the whole fiat system comes down and we have this kind of reset, what these guys are talking about, I think then gold has a tremendous amount of purchasing power. And I always recommend people, to also buy silver coins, because that's really stuff that you can use. You go to the farmer, you go to the butcher, you can go to the bakery, and you will have something to exchange against, these products. And maybe, one silver coin might buy you can go to the farmer and you tell the guy, listen, I give you an ounce of silver and I would like to have a chicken per week for the next so and so many weeks or months. So you need both. You need gold in smaller quantities to be liquid. As I said, an ounce of gold purchased the house, and silver is basically for the daily goods. It's like cash equivalent, and so silver is definitely going to play a huge role also in the future. And when we look at the moment, how much silver is valued, I mean, it's right now, I think, 90 times cheaper again than gold. And the historical ratio, I mean, you can find silver 1 to 15 times more than gold in the ground. So basically, the old classic relationship was 1 to 15, something like this. When we look back into the system over the last 40, 50 years, it was always around 1 to 40. And now it stands, 90 times cheaper than gold. So it means silver is even more undervalued than gold. And once we are back in this commodity cycle, in the gold cycle, I'm sure that silver is going to outperform gold. It will rise faster than gold, because I mean all the gold we ever digged out of the ground, basically we can say 1% disappeared in the industry, and the rest of it is still there. 50% in jewelries, 50% is in banking gold, private holders holding gold. But when it comes to silver, of course, the stock is not that big. It's much smaller because most of it goes into the industry in the past. And so therefore, there is the silver market is much smaller. And whenever a market is smaller and there is more money coming into that sector, I mean, it's just going to, spike faster, than his bigger brother, so-called gold.
The next issue I'd like to get on to is kind of the role in terms of a society, the role in terms of personal liberty and society-wide liberty. I was speaking with an Islamic scholar, and Islam obviously has a view of debt which is somewhat similar to the way you just expressed it a short while ago. And this Islamic scholar was talking about we need to return to money with integrity, and by money with integrity he meant gold and silver. And one of the things which made a big impression on me personally is if you plot the wealth of the Western population in terms of percentiles, you're the bottom 10% of the population, the poorest 10%, the next 10%, etc., right up to the top 10%. And you plot their wealth against time. It's a very interesting thing which emerges, which is up until 1971, everything's going up, everyone's getting wealthier. The poorest are getting wealthier slightly faster than the richest people. And overall, the gap between richest and poorest is reducing, not hugely, but it's reducing steadily. And it does that from the Second World War to 1971. 1971, it changes. The poorest 10% basically flatline. They don't get much wealthier after that. The richest 10% do fabulously well. And of course, what happened in 1971? We came off the last vestige of the gold standard. Nixon closed the window. The gold window, he defaulted, essentially, the United States defaulted on the promise to pay in gold, and that link to money with integrity was lost. So we then have inflationary money printing, which obviously benefits those who get the money first, the richest, the banking industry, the banking interests, financial sector, people like this, and hits hardest the poorest, the pensioners,
the people on fixed income, so they suffer. So this issue of money with integrity being essential to create a society with integrity. Could you explore that a little bit for us, please?
I mean, the name of my company is sound money for a sound society. And I think, if you have corrupted money like we do today, I mean, it also ends with a corrupted society, of course. And as you mentioned before, this is the so-called Cantillon effect. So whoever receives the newly created currency can buy at existing level. And, the closer they are standing to the central banking system, all these political, friends and, the big institutional companies and the banking system, of course, they were profiting from it. And then, the longer we have to wait until the money comes into our hands, I mean, then all the prices already have risen. So inflation is basically a hidden tax. I mean, so it's impoverishing the people through the back door, and most of the people don't understand the concept of inflation. And so that also on the other side, of course, we always had huge inflation in the past, but it goes into certain asset bubbles, like real estate, like the stock market. And so, of course, the very wealthy one, they were always owning those assets. And when you fuel, when you fuel more credit into the system, it went into those bubbles. But at the same time, of course, the purchasing power of money came down. So, even when we had, an inflation a few percent, I mean, you never got, the inflation with a higher salary usually. So it was, I mean, we can see, that since 1971, I mean, the US dollar lost, I think, 98% of its wealth against gold. And that goes, for most of the currencies all over the world. So, I mean, some people are saying, gold has not performed that nicely. But when you think about, if you would have started buying gold in 2000, I mean, in the last 22 years, in US dollar terms, gold increased on average 9.6% per year. It depreciated 9.6%. So, I mean, and in Swiss franc, it was 6.8%. So, it worked out. I mean, gold protects you against inflation. It helps you, to put money on the side and to save without taking risks. And at the same time, you can be sure that in the future, if you hold it, you can buy basically more goods and services than in the past. So I mean, even when you look at the whole performance over the last 22 years, you could also have invested in Warren Buffett, Berkshire Hathaway. You would have had about the same performance as when you would have purchased physical gold or silver. I mean, I started buying in 2004. I think silver was back then around $5, and gold was around 380. I always purchased when I had some money on the side. And today we are standing on $1,900 and $21. So it just shows, it's working. You don't have to speculate. You don't have to take these risks just to become more wealthier. There are also other ways how to achieve that. And of course, at the same time, when you take that money out of the fiat money and the banking system, you don't sponsor, this corrupted system, where they can bribe politicians and finance war, with money they don't have. Once it's out, it's in the gold, it's in physical precious metals. I mean, then at least you're not dealing with that corrupted system any longer.
Yes, I had some experience back in the 2007-8 crisis, which eventually took out me, Pip, as I was working in and heavily invested in construction and house building. So I was basically taken down to zero in terms of net asset then, and of course I had lots of interactions with banks, who were, I think, vindictive is the word that springs to mind. The banks treated creditors at this point, treated their customers at this point just appallingly, and they tried various things, including, in my particular case, theft, which they eventually balked at. They got some advice that was actually just grossly illegal, and they didn't. But they'd actually sent me a letter explaining they were going to steal my money. So I was feeling quite anti-bank at the time. And so I wasn't leaving much money in because I was like, well, these people, they just multiply this. If I deposit money with them, they're going to lend it out. They're going to use that to multiply and create money out of thin air based on what I'm depositing with them. If I take the money out and hold it as cash, gold, silver, anything, they can't do that. So I was going in and I was taking out, what I could, reasonably large sums of money. The reaction of the banks was fascinating. They were very curious as to what I was doing. They wanted to know what, so what are you doing with the money? And I would smile at them and say, oh, I'm stuffing a pillow. And I wouldn't tell them. And you could see the angst as the money kind of disappeared from the institution. And I must admit, for a while, I quite enjoyed doing that. But I certainly came away from that situation thinking, well, I can't trust the banks because I saw how they behaved. Because when things get nasty, the banks, they do not look after the customers, they look after themselves. Outright theft is a definite possibility. You have this huge counterparty risk with the bank. The relationship we have with banks, if you put money on deposit, we're actually lending money to the banks, and we are unsecured creditors. The position that the public has with the banks is very weak legally. We have the illusion of a government-backed guarantee scheme. Now, this is meant to be 100,000 euros, £85,000 this side of the Atlantic, £250,000 to America. And this has been talked about in the last few days because with the two banks in America failing, we've had, the scheme to insure these deposits will come to the rescue. In fact, it's been beefed up. It's now going to rescue everybody, not just the people who have up to £250,000 on deposit. And how much value does that have? How much value is in that scheme on deposit? How much actual worth? Well, about, I think it's 1% of the amount it claims to insure. So if there's a serious crisis, the insurance scheme's not going to cover it. Now, they have, I think it's 100 billion line of credit with the Treasury Department, and so they can call on extra resources. That was put up at one point temporarily to 500 billion, half a trillion. So presumably that will happen again, and again, if there's a major run in the banks, there will be some sort of money creation, money printing, bailout concocted by the state. But the things which are meant to give us confidence, when you look at them, they're not really there. It's a virtual guarantee. It's not a real guarantee. It's an insurance scheme, but there's not enough assets to actually insure, 2% of what it's claiming to insure. So it's a confidence building scheme until the confidence goes. And when the confidence goes, the scheme's no longer going to be effective. And the public are going to find themselves in horrible trouble, because these things normally happen over weekends. The banks close, there's never any warning, and there will be very tight control over what you can take out of cash line machines. There'll be the way a banking crisis is likely to develop won't give the public any warning. It will be sudden, it will be hidden from the public, and then the public will just have to take what they're given at that point. They'll no longer be in control because their assets are in these banks, because there's this counterparty risk, because they don't have independent access to cash or gold or silver or something of value outside the banking system. They are essentially fully committed. They've bet everything on the survival of the banking system. Do you have how do you see the final crisis when it emerges? And we don't know when. How do you see the final crisis as playing out?
Yeah, you're right. Private property rights within the banking system are only of temporary nature. I fully agree with that. And because when you lend money to the bank, you get an interest rate which is almost very small, and so the bank becomes the owner. And an insurance, an insurance is fine if you have a few houses in a city burning down, but if all the cities are in fire, then the insurance company goes down. And on the other side, hyperinflation, that will be the outcome sometime in the future, but this is only going to occur when people lose faith into the institutions. And for example, when we look at the Weimar Republic 100 years ago, once they had more than 10% inflation, 18 months later they had hyperinflation. And so I think now we can see all the risk in the banking system. So it might be that on Friday the banks are closing and on Monday are not going to open up, and that we have systematic risks even when it comes to the energy. For example, over here in Europe, if the energy system, which is everything is interlinked, if that goes down, I have no clue. They're going to say, hey, money is gone, the bank system is gone, you will receive now a central banking digital coin, download the app, and then you will receive some government-sponsored money out of nothing in a new form, which of course will be then used to trace and track. But at the end of the day, as I said, because you switch from a fiat money bullshit system into a new central banking digital coin, which is basically nothing else standing behind it. It's just purely digital, and it will be used to control, like in China, where you spend, how you spend, and if you spend for the wrong things, or if you say something wrong, then they will just limit you in your action radius and so on. So I think, today, the only insurance which really makes sense are basically hard assets, stuff that you can put on the side. I always recommend it to my customers. Physical gold, see it as your insurance against the crash of the system. You can also, as if you have a long-term horizon in the past, you can save money, you can put it on the side, not taking risk, and you are prepared. And you can be sure that in 5-10 years that you will have a higher purchasing power. And so for me, at the moment, everything, is people should think about how to protect the wealth they have instead of trying to invest and playing in these monopoly markets, which are, they're gonna fail. Sooner than later. I think, because we have these long-term debt cycles, 50 years, jubilee, we already know it from the Bible. Every 50 years, debts were forgiven, the slaves were freed. And so I think we are now really in we have 1913, the central banking system, another 50 years, basically end of the 60s, if you were an American and you came to Europe, nobody wanted to accept the US dollar because the people thought, it's over. The US is bankrupt. And when they, of course, made the deal, with the Saudis, that dollar will be backed up by petrodollars and so on, and that everything needs to be traded. So they created the new artificial market. And when we look at the total debt, for example, in the States, 99% is since 1971. And, now it's really just exponential. And everything comes to an end. And I think we are really in that final stage. But to keep stuff together, governments have to use more force to keep it together. That's what we have witnessed over the last few years. Because we can see these cracks in the system for a very long time already, and I think they are getting bigger and bigger. And now the destruction of the system as we know it. So to me, it's really they are pushing this great reset. They want to create something new. And in the meantime, they're just propagating their ideas, which we can grasp because we have seen it in these Hollywood movies, the World 2020, robots, artificial intelligence, pandemias and all that stuff. And I think this is just all a deception to basically put, to accelerate fear, because fear is the biggest enemy of liberty. And fear is also the enemy of sound reasoning, so that the people are paralyzed and that they don't act. And so I'm focusing on the guys, of course, who understand the world we are in and who understand that there will be no messiah or no government will help them or bail them out in the future. People who understand that they have to take self-responsibility and basically decouple from all the systematic risks which are within the current system, which is being destroyed actively by our politicians, central bankers, and this fascist big business alliance.
Maybe I can get your comment. We were having a discussion on the UK column News Extra discussion, argument, debate. Basically between the issue of the problem with the current system is one of incompetence. And the problem with the current system is one of an actual conspiracy to bring it down and to create the Great Reset. And we've got lots of views within the UK column on how much of it is one, how much of it is the other. I'm seeing a lot of incompetence. I look at central bank policy, and it doesn't make any sense to me that what they're doing, their predictions are manifestly inaccurate over and over and over again, and almost laughably so. It looks quite incompetent. And whilst I completely accept there is a desire to create this Great Reset, I see incompetence as well, which may prevent them getting to it. And the system may fall apart because of the incompetence before we get to the reset and the planned destruction. Whereas other people in the column think that we'll get to the planned destruction before it falls apart via incompetence. Where do you come down on that argument?
As I said, the system will go bust when people lose confidence into the system. Once they realize that when they take the money and they exchange it directly into hard assets, we had this. I've never went through a hyperinflation. I never went through a world economic crisis at the end of the day. So so it's always hard to imagine because something which you never experienced in your lifetime. But I think, it's one fine day. During the Weimar Republic, an egg. When you went to have breakfast, you ordered the egg and you already paid it immediately, and it was maybe 2 trillion, whatever, because until you had to wait for the egg, maybe the price was already 3.2 or 3.3 billion. So it's when people lose faith into the institution, then we're going to see hyperinflation. And of course, right now, we can say more and more people are waking up. We haven't reached that boiling point, but I think inflation, which we have seen last year, it's back. You cannot, and the inflation, I expect a higher inflation at least for the second half, and then then we will see how fast it's going to, how fast the people will start, even more taking their assets out of the banking system and turn it into something tangible.
Yeah, this is one of the issues that has prompted a lot of debate. But in people who maybe see the world broadly as we do, between those who see a hyperinflationary collapse and those who see a deflationary collapse, the ones who see that deflation as being the issue are saying, well, the central banks are causing the deflation. It's therefore a controlled demolition of the economy, if you will. And the ones who say, well, no, it's going to be a hyperinflationary collapse, which will essentially expunge all debts, and it's not actually in the interest of the banking system either. That's to do with them losing control. That's to do with the errors that they've already built into the system. The fact that they have this boom and bust cycle, but now the central banks won't allow the bust. So there's no cleansing of malinvestment, and it just stacks up and stacks up and stacks up until you've got a huge bust. And if they don't allow that to happen, then the currency goes and you have a hyperinflationary collapse. So those who think that it's a deflationary collapse are maybe more likely to think, well, it'll be planned, it'll be coordinated, it'll be brought in to introduce the Great Reset, the central bank digital currency. Those who think it's going to be a hyperinflationary collapse see it as folly and error, eventually getting out of control and developing a momentum of its own that the banking system, the banking cartel, can no longer control. Is that a fair summary of the debate as to whether it's incompetence or evil intent?
Central banks have nothing under control. You cannot centrally plan an economy, and that's what these guys tried over the last decades. But it's impossible. We need free markets, because in a centrally planned economy, you always have a misallocation of goods and services because you don't have real prices, and prices give you an indicate, for the demand side, that you can calculate something. So in a centrally planned economy, you just have to assume stuff, and you steer it into what the government decides, and this will always lead to chaos. It never worked. Otherwise, that's why the communism collapsed. That's why the Soviet Union collapsed. We have seen plenty of examples in the past. The more it was centralized, the bigger the downfall. And so they have nothing under control. And at the end of the day, if you're going to have a deflationary or bust or a hyperinflation, the outcome will be the same. And I also expect, deflation. Once the market correction starts, the central bankers, they always started to inject new liquidity. They always then took down the interest rates and tried, to accelerate another bubble. But we have this crack up boom theory in the Austrian school, so that once you reach a certain tipping point, then you're going to end up with hyperinflation. And I think, I don't want to bet, because gold and silver physically, it's going to perform in both cases. Because even when you think about deflation, you have to look at the financial system as an inverted pyramid. And the higher you up in the pyramid, there you have stuff with the highest risk, and at the bottom of the pyramid stands physical gold. So still up to today. So when even in a deflationary environment, people will basically go out of the stuff with highest risks, and they will try to look for quality and for soundness, and therefore even in a deflationary environment, gold is going to perform nicely.
To finish off, Claudio, you're based in Switzerland, which is obviously a synonym for the banking sector, for precious metals, for historically for banking prudence, home of the Bank of International Settlements. You have a very unique take on the Swiss situation. I'm aware of some cracks showing in the Swiss banking system, particularly in Credit Suisse. And their soundness seems to be called into question. Are there any specific Swiss banking and monetary issues that you see that you feel our audience should be aware of?
When we look at the big banks, Credit Suisse, UBS, for example, they're not Swiss banks any longer. Even since the end of the 90s. Credit Suisse purchased First Boston and UBS Warburg. They both got the primary dealer status from the Federal Reserve. Even when you look at the banking reports end of the 80s, for example, we were talking about a few 100 millions, and now we are talking about trillions. And I would say since during the 90s we injected so much, there was a big party. When the communism falling down, we basically, the world which we were in were divided, and, everything came together. So it was huge. They could really fill up new credit markets with new money. And so that money also has corrupted, the Swiss banking system. So I think, the big banks, even here in Switzerland, I don't consider them, they are not in line with the Swiss values any longer. It has been corrupted. I think what is really important still up to today is, the protection of private property. Because in the European Union or in the States, the federal government, the centralized government, they can decide whatever they want to. Here in Switzerland, you still have to ask people if you want to confiscate private assets. I mean, we have seen that our government also broke our constitution over the last few years. But we have, over the last few weeks, we had this debate, if, for example, Russian assets can be frozen and handed over to the Ukrainian government to build up their corrupted government. And then basically, the Swiss decided, no, this is not possible. It would go against our neutrality. And the other stuff was, selling, that third countries are allowed to sell Swiss weapons to Ukraine, for example, or to deliver weapons to Ukraine. And this also has been stopped by our parliament. So it just shows, we are still a different number. We are still a neutral nation. It's still, we offer a bit more. I think private property cannot be that easily confiscated as in surrounding countries. So, I mean, certain mechanisms are still in place. But of course, the big banks, I mean, Credit Suisse, it's, might be the next Lehman Brothers. So yeah, one day, I mean, Credit Suisse, it can basically go bust at any time. And if we then have, our central bank jumping in, bailing them out up to a certain level, I'm not sure if it's gonna work this time again. So I think really it's important to prepare for, we're not going to go back to pre-corona days. The world has changed. And so people have to start using their own mind, independent of another person's guidance. And I think just, sound reasoning will lead them toward the right outcome, and they will understand how to prepare, and that it makes sense to exit the system, which is doomed anyway.
Well, that's an excellent place to finish the interview. Exiting the doomed system. I think that's something that I find very attractive, and I'm sure many of our viewers will. Claudio, it's been a pleasure talking to you. Hope we can do this again sometime soon. And we'll maybe be talking about much higher gold and silver prices when we do. Until then, Claudio, thank you very much.